Hey guys, welcome back to my YouTube channel. My name is Alayla and I trade trend lines. This video was requested by someone in my previous video. They basically want me to try the same thing on the lower time frame. So I'm going to show you how I would map my internal structure on the 15-minute time frame, the lower time frame, and give an explanation. So if you like, please like the video. Please subscribe and share to somebody else. Yes, let's get the word out there. We're on 25 1 second, and we see that this was an uptrend, right? We see that this was an uptrend here. We know that it's an uptrend before because we see higher highs and higher lows. The market came here, it broke the previous high, broke the previous high here, broke the previous high, etc. It's going up, it's going up, it's going up until we have arrived at the last high within this uptrend here. So the market is currently at this level. We should now outline the previous low. All right, remember, we have our internal structure. Let's say we were still in the market going upwards. So we have our low right here, and then we have our high. So when the market starts to do its pullback, we're going to think, remember, when the market is trending, we're going to always think the market is going to continue, even though we have in the back of our heads that the market can start to reverse at any point in time. We should be hoping that the trend continues. All right, so what we would do here, outline our previous swing low and or recent swing high here. When the market reaches to this point, as you can see, the market reversed and fell. Now, because we want the market to maintain its uptrend, we're going to say, okay, it might come somewhere in the internal structure. The internal structure is between this high and the previous low and this low right here. So let me just delete this break of structure and show you that the internal structure is right here. This is where the internal structure is, in this area right here. So we would be saying, all right, the market is going to continue its uptrend, so it might pull back to the 38, 61 or 78. It might pull back to those levels before continuing up. However, in this case, the market didn't do that. What do we see the market do? It made its pullback past the 78 and wicked out. First, it wicked out the previous low right here. When the market came and wicked this area out, it made its small little swing high here before actually breaking below this previous low, which is the main low on the 15-minute time frame, and then it closed below it. So it broke and closed below this level. When it does that, you should have in your mind, okay, maybe the market is it's trying to show me something, because if the market is trending, it shouldn't come back to the previous low. It shouldn't do that. It must maintain the low. In order for you to have an uptrend, the market must maintain the previous lows, right? So if the market does something like that, stop, don't engage any at all, and watch and see what the market does. So in my head, I would call this a change of character. A change of character. Usually when I see a change of character, I don't just jump into the market, right? I don't just jump into the market. I would have to wait on a break of structure afterwards to really confirm that, okay, the market is going to reverse. All right, so we didn't have a break of this high, but we have a break of the previous low, giving us a change of character. So the break of structure that I'm looking for, I'm going to use my Fibonacci retracement tool from this high to, and I'm going to wait on a pullback. After the change of character, I'm going to wait on a pullback. All right, so I'm gonna wait. I have a 1 candle pullback here. The market did not come up to the 38%, so this is not what I'm looking for. I just leave the market alone and wait on the pullback to happen. As you can see, the market has started another pullback here. You just pull your Fibonacci retracement tool from the previous high. This is still the previous high right here. right? Because this high, this is a high as well, enough. If you use the fib here and come to this level, you'll see that this is a valid high because it touched the 38. However, this happened before the break and close, so it's still within this internal structure, and this is the highest point that pushed the market down to break the previous low. I hope you understand. If you didn't understand that, please go back over that. That can be very overstimulating to the mind. All right, so this is why I start from this high, being that this is the high that pushed the market down to break the previous low. And now we wait on a valid and steep pullback towards the 38% fib line, which is at this level. All right, so when we see that the market reversed from the 38, and this is the highest point. So the internal structure, let me outline the internal structure. The internal structure is between this high right here and this low, because this is where the pullback has started. All right, so the highest point, remember, the highest point in this internal structure is the next valid swing high for our next internal structure. All right, so now that we've gotten that down, we can delete our Fibonacci tool and we can highlight this new lower high that the market has created. When we see the market doing something like this, if I'm on the 15-minute time frame, look, remember I told you that I was waiting on a breakup structure. This is where the breakup structure happened, right? The breakup structure. So for reversals, I wait on the lower time frame, I wait on change of character followed by a breakup structure for confirmation. So this is how I would enter the market. I would enter the market at this level, and my stop would be at the previous high, and then I watch as the market progresses. All right, so we're not focusing on that though. So what we do now, because this is the last valid high, we outline this and then we wait on a next valid pullback towards the 38% fib line. So what we do, we come in with our fib as the market progresses downwards. We come in with our Fibonacci retracement tool, and this is also a method you can use to stay in the market. All right, so let's see if the market makes another pullback. No, this is not valid right here. That one was not valid. Let's start again. The market progresses, it breaks, it's continuing down, not valid, not valid at this pullback either. You see, this did not make it to the 38, so that's not valid either. So let's continue downwards. This is still the high that we're working with. So this pullback wasn't valid right here. Then this one candle pullback right here didn't even budge. So we come to this pullback here, and as you can see, this is the level that the market touched, the 38% fib line here. But let's we're talking about just the market structure, right? We're talking about market structure. So the internal structure, since it came to the 38% fib line here, the internal structure is now gonna be between this high and this low. So the highest point inside this level here, all right, the highest point within this level, this is the major lower high for the next internal structure. All right, so let's see, the market came to the 38% here. It didn't this wasn't this level of resistance. See, support right here. So let me outline that. At this level that we have right here, we have support, resistance. It didn't break above it here. As you can see, the market came and then reversed from this level. So this is a key level that the market could reverse from. It came to it though and gave us some type of resistance in this area, but it wasn't strong enough to actually push the market down. So the market continued upwards. It came to the 61 level here within this fair value gap. That still wasn't strong enough to push down the market. So it's continuing. What do you see the market actually reversed from? the market came close. Let me first draw this over. Let me draw. So as you can see, the market came really close to the 78% area here, and I think it's a fair value gap in this area that actually reversed the market previous support as well. All right, so the market filled that gap. The market filled that gap and then reversed to the downside. All right, so this is the high. This is the next valid high for, let me just highlight that. So this is the next valid high right here. That's going to be or set up for the next internal structure. All right, because after the market came to this level, this is the highest point that pushed down the market. It's not this high. Do not be deceived. It's not this high. This is just a retest of supply, or just this level. It's just a retest right here, somewhere there. All right, so the market made the push to the downside, came back, tap into this level, and then pushed to the downside. So this is the next high that we're focusing on. If you don't have this down, if you don't understand, people will think that this change of character is the market reversing completely for a buy, and as you can see, that's not the case. All right, so if you want to really understand and elevate your trading, please understand what market structure is. Do understand as well, do your research on technical analysis and internal structure. All right, and internal structure. So in my head, because I understand market structure, if these highs, as these pullbacks, as I said to you before, they didn't make it to the 38, so these are levels that the market can easily come and sweep. They can easily come and take them out. As you can see, it did that. It come and take out these levels, so I wouldn't even enter the market on these levels. If I miss the move here, I'm not entering off of these, because as you can see, and as I told you before, the market did not pull back to the 38 on these pullbacks any at all. So I wouldn't enter off of these and hold my trade. It would just be a one and done thing. I would target the previous low, like enter somewhere here, like go down on the 2-minute time frame, look for a change of character and a break of structure, and then target the low right here. But you're not going to catch me doing that. No ma'am. No ma'am. No ma'am. No. Okay, all right, so if you like content like this, please subscribe, please like, refer it to somebody else, and I'll see you in the next video.